get.
Good evening. You're with us on The Big Question on NDTV Profit. I'm Vikram Oza. The big talking point since yesterday's budget has been that massive hike in Securities Transaction Tax, STT, on F&O trades. Now, options STT is up 50%, futures STT up a steep 150%. And all of this kicking in from the 1st of April this year. Now, the government says this is not about revenue. It is about reining in speculative excesses at a time when India's derivatives market has ballooned, often at the cost of retail investors. And SEBI's own data, when you look at it, is showing that 90% of retail F&O traders have lost money in FY25, with losses averaging over 1.1 lakh rupees per trader. Hence, it begs the question, is this the much-needed circuit breaker, so to speak, or is it a shock that could choke market participation? At her post-budget press conference, we heard from the Finance Minister, Nirmala Sitharaman, and she made the government's stance loud and clear that this hike targets only F&O and it's meant to protect small investors, not punish the markets. It's a claim that she has reiterated once again today when we were in conversation with her. But let's listen in to what the Finance Minister has said specifically about this.
We are touching only the futures and options. STT otherwise बाकी सब का ट्रांजैक्शन के ऊपर कोई नहीं किया. मगर जहाँ स्पेकुलेशन, हिंदी में सट्टा बोलते हैं, स्पेकुलेशन ज़्यादा और समटाइम्स हाईली रिस्की, क्योंकि हमें मैसेज आता है लोगों से कि इधर बहुत लॉस भी फेस कर रहे हैं लोग जिनके हाथ में इतना एक्स्ट्रा पैसा भी नहीं है जिससे वो स्पेकुलेट कर सकते हैं. सो दिस नॉमिनल इंक्रीज इज प्योरली एम्ड एट हाई स्पेकुलेशन, ओनली टू डिटर देम. मकसद बोल रहे हैं, हाँ, उनको थोड़ा डिस्करेज करने के लिए. हम इसके खिलाफ नहीं है, ज़रूर एक्टिविटी जो होता है उसका रेस्पेक्ट करते हैं, मगर इतने लॉस और इतने छोटे छोटे लोग का लॉस को सरकार देखकर कैसे आप चुप रह सकते हो? डिटर करो थोड़ा उसको पीछे हटने के लिए, बस उतना ही.
So the government is citing the protection of small investors, this entire move, not as a revenue stream for the government, but the reaction from the markets has been anything but mild. Look at the capital market stocks. They've seen deep cuts today. Brokerage platforms assessing the hit. Even industry voices are divided on this. In fact, we heard from Zerodha's Nitin Kamath. He's publicly wondered in a post on X that he put out, there you have the quotes before you, whether this hike is really going to dent speculative F&O activity. He argues that traders often pay more in brokerage and slippages than they do in STT. In fact, we also spoke to market leaders to gauge the sector's pulse. Let's get you some of those reactions.
Market didn't like the STT stuff, so they started selling. In any case, backdrop was already this gold and silver debacle had already happened about the commodities, and then on top of it, this STT, this irritant comes, Right. It is a very small thing, and actually for investors, it doesn't matter at all.
Right, agreed.
It is only for the speculators, which is, they have touched it. I mean, this is not the time we should be actually taking panga with any of these investors.
See, we have seen last 11 years, a lot of increase in the options STT. This is a STT increase on futures more than the options in some ways. And it was expected also to the extent that there has been a lot of criticism of over speculation happening in Indian derivatives market. In the short run, of course, there will be volumes that will be affected.
STT increase is to orient people towards long-term equity investment. Today, the STT on intraday cash will be lower than that of F&O. So it therefore orients people to look into the equities market and plan for long-term equity investment. Arbitrage funds which try to trade futures versus underlying cash may become costlier because of the increased STT. So the attraction towards, say, bank deposits may increase. That is another outcome that can happen.
So you heard from the brokerages, you're hearing from the exchanges as well, which is why tonight we are asking the big question, this STT hike, can it really curb trading excesses, which is what the government is hoping for. And joining us to break this down is A. Balasubramaniam, the MD and CEO of Aditya Birla Sun Life AMC. Good to have you with us, sir. Mr. Gupta is also with us. JN Gupta is co-founder and MD of SES, and he, of course, brings in all his experience at SEBI. Rajesh Baheti, the Managing Director of Cross Seas Capital with us, along with market expert Ajay Bagga, and Tejas Khoday, the CEO and co-founder of FYERS. Gentlemen, welcome to the show, and let's dive right in. I need very short and sharp answers, if I may request you to just set the stage for me. One line on your position and one line on why. Mr. Gupta, if I can ask you first. You think the STT hike meaningfully curbs speculation, yes or no?
I will ask a counter question. First of all, good evening, everybody. I will ask a counter question. Has increase in excise duty on liquor or cigarette curbed the consumption? The answer is no.
Right.
The issue is something, if people are hooked on to something, you can't make them change by 0.05 or point something.
What is the single most important guardrail that you would add right now if you had to? Short answer again.
Yeah, so I am saying that if my counter question is this, I have seen for last 30, 40 years, increase in excise duty on liquor and tobacco. And I have seen the consumption going on. If you read the newspaper, then you find that the alcohol consumption in India is going up and up compared to many other countries. So the taxes are not a deterrent to users.
Right.
Let us be very simple.
Very simple. Bala, what do you say to that? From a long-only institutional lens, does this hike in STT make the broader equity ecosystem safer, or do you think it risks impairing the depth and the hedging tools that funds rely on?
Then the I see is they'll bring in the necessary behavioral change from a speculative mindset to the ownership mindset. I think my view will shift psychologically for people to look at, should I speculate and by wherein my cost of doing the transaction is going up because of the STT. So definitely, as Gupta was saying, that not necessarily this will lead to a significant reduction. Those who have developed the master, or rather the people who have been playing the market in the F&O market, are the people I would assume the informed investors.
Yes.
One strategy that I just want to highlight, which was of course shared by NSE MD Ashish Chavan today morning in our closed door group meeting. There are only about out of 7.5 crores investors who trade in the market, roughly about only 25 lakhs retail investors trade, individuals, and out of which only about 10 lakh people frequently trade in the F&O market. To the extent the people I would assume are informed investors, so to speak. But this increase in STT definitely is giving a signal to the people who are actually uninformed investors who have been coming to the market in the F&O market and losing money. Is something is also good intent. I would actually use the word, the government is also caring for the people who are actually trading in the F&O market without knowing how serious it could be.
So you think this is more of a signal, which is what the government is hoping for as well. Rajesh Baheti, net for small traders, is this going to be that helpful nudge that the government is hoping it's going to be, or you think it's going to cause this harmful friction? In one line, where does the real cost bite? Is it going to be STT or the slippage or the misuse of this leverage?
Very simple. If the government wants to send a signal, and clearly they said this is more for signaling and not for revenue. And we want people to go more towards the cash market and long-term investing. Why wasn't this done together with removing the STT on delivery?
Right.
You could have removed the STT on delivery, given a very, very positive signal, go and buy stocks for delivery, and get out of F&O. We are making that tax-free in terms of transaction cost. There is anyways taxes on short-term and long-term gains, which was the reason STT was introduced when the taxes were abolished. And now that those taxes have come back, if you wanted to send a signal, you should have sent the signal in the right manner by at the same time removing STT on delivery. But you've not done that. So clearly there's a revenue angle. Obviously nobody wants to admit it, but let's face it, there's a revenue angle. There are many other ways to skin a cow. And this
Mr.
is not
Bagga, what do you say to that? Mr. Baheti is saying there is definitely a revenue angle. Do you think this is going to dampen volumes and liquidity is going to get affected materially from the 1st of April, or do you think this is going to be transient, the impact?
No, I am not bothered about the revenues of the brokerages because, and the stock exchange. NSE makes 80% of its revenue from F&O. Bombay Stock Exchange makes 60%. Obviously, they can't talk against the government action. So, and the brokers, if you look at, they're making anything from 40 to 65% of their revenues from F&O. My questions are threefold, Vikram. Why aren't you addressing the high frequency guys? Why aren't you taxing more the people whom you have allowed to co-locate within the exchanges and sit and fleece the retail investors? What Bala is saying, only 10 lakh Indians are regularly investing in this F&O. So why aren't you protecting them against these high frequency guys are not adding anything. In fact, they have made Indians lose 1 lakh crores and they have gone away with the SEBI taking very limited action. They just paid the fine. They've gone away laughing. You can't catch them. They have no permanent establishment in India and they continue to operate. Why aren't you addressing that? If you look at
Valid
second
question.
is STT.
Valid question.
If you are looking at STT, STT has gone up at 35% CAGR.
Yes.
In the last 4 years, your income tax, personal income tax has doubled. Your corporate tax is 70% up. STT has gone up from 23,000 to 55,000. And this year, the target was 75. We are probably coming in nearer to 57 because last time around it was raised by 60%. After that, volumes have fallen.
Yes.
Third, I totally agree with Mr. Baheti. You want people to go into long term, make mutual funds tax-free. Anyone comes through a collective investment vehicle, why don't you make AIFs tax-free? At least somebody is managing those. And these poor Indians, these 7 crore Indians will not lose money. Make mutual fund, no STT, no capital gains. Give them things like that.
Right.
And the equity, the cash equity, make it tax-free again. Say 1 year you hold cash equity, I will not charge you long-term. If you're really bothered about this is no understanding. And even the Income Tax Act does not define F&O as speculation. So what the income tax issued or the finance minister calling it speculation or using a very bad Hindi word of satta, I think that was out of order totally, Vikram.
Tejas, I saw you nod in agreement to what Mr. Bagga is saying over here. Will behavior actually change, you think? Fewer trades, longer holding periods, or do you think traders simply absorb the cost? Which cohort is going to shift the most? Is it going to be the first-time retail, the active F&O, or do you think it's going to be the proprietary and the high-frequency trade desks?
It will impact everybody, Vikram. First of all, I respect the opinions of all the other panelists over here. I'd like to take a few steps back and maybe talk about the importance of speculators and risk takers in our financial markets, right? They've almost been taking brickbats from everybody who's offering commentary on the subject. But let's not forget that financial markets can never be close to efficient without people wanting to take risk and earning a commensurate return for that service they offer to the markets. It's like they're the oil of the engine, and to tax them like this to the point of it becoming so punitive is just going to do more harm than good.
Right.
Look, STT was introduced in the year 2004 by Mr. Chidambaram, and it's gone up like 3 to 4 times. It's gone up 3 times in the last 3 years alone, right? And why was it introduced in the first place? To ensure tax compliance, because people were not declaring how much money they made in the markets. And so this was like a pipeline, a tap which can increase the force of the tax collection and ensure compliance. It works similar to a TCS, right? Like a toll gate fee that one pays.
Right.
So by increasing this, will this affect participation? Yes, of course it will, because unlike what somebody said, this traders cannot be equated to addicted smokers or drinkers, like alcoholics. And the reason is because they are rational-minded people who come to participate and make money, right? And this is a rational endeavor. So they cannot be equated to alcoholics or drug addicts. And so I don't at all advocate for that.
Right.
But yeah, would it impact volumes? 100%. Why wouldn't it?
Right.
Like,
Mr. Gupta, how do you come back on that?
Analogy,
to what you're hearing from Tejas, one risk that you're worried about. Do you think volumes are going to migrate? Would you concede that? Offshore shifting or a rise in informal leverage? Just the sharper worry that you have on this.
Absolutely.
Mr.
Absolutely.
Gupta.
So those who can afford can already have already.
Let me take that
moved,
across to Mr.
residents
Gupta.
to Dubai.
Let me take that across to Mr. Gupta, Tejas.
Okay. Thank you. I am again saying whether the finance minister or ministry or everybody is really knowing who are the people who do trading in the option and future and lose money. You have two sets of investors. One who really invest by knowing or by something, but other set of investors who does the investing by the induction effect. They just say that, oh, I made so much profit in option, I just spent 2,000 rupees margin and I got 1 lakh rupees next day. So I am induced to that. So anybody who wants to make quick profit, become rich overnight, I am only saying one thing, greed is married to grief. You will meet this, there is no divorce provision in these two. So we cannot protect those people who wants to become overnight rich. So now what you are doing is you are harming other investors. See,
so you're saying protection is not possible, Mr. Gupta. If I'm reading you correctly, you're saying that protection should not be given. It is not possible.
I'm saying while giving a protection to a small set who may not be really deserving the protection because they are doing it consciously, you are causing harm to million others. What is happening when you do all these things? The liquidity from the market wipes out. There will be lesser and lesser transaction. So ultimately the transaction cost goes up. When the transaction cost goes up or the buy-sell difference goes up, then mutual fund will lose out, the individual investor.
Let me ask Bala about this then. How is the impact likely to play out, Bala? The broader mutual fund industry, are you concerned that reduced derivatives liquidity is going to make hedging more expensive for fund managers? And do you think that is ultimately going to affect the stability of the NAVs?
I don't see it's a big challenge, Vikram. Given the fact that the introduction of STT, initially it could have some knee-jerk reactions in terms of the transaction will become costly. At the end of the day, anybody who trades in the F&O market, one is an informed, and second is anyway looking at a speculative gain. And to the extent you also know what is the cost of trading in the F&O market with the introduction of STT. Therefore, it only became a little costlier than the previous period that they had.
Yes.
But from the broader point of view, the way I think mutual funds are participating in the developing the market, more and more participation coming in the market, I don't think liquidity will have any kind of impact. Price discovery is not going to be an impact. But definitely the participation levels, I think people who have not been successful in trading the F&O market for a variety of reasons. With the increase in cost, probably they will be taken away from the market. But as somebody mentioned about, Bagga mentioned about the frequency, the high frequency traders, they are not going to go away given the fact that their entire business model is built around the F&O trading worldwide. Therefore, large institutional investors, when they come, they would either pay this STT, not shying away from trading the market as long as they have the visibility of making money. And mispricing is the one where they take advantage in the F&O market. That will remain. That's the nature of the market. That will remain. But I don't think it will have any impact, so to speak, on the volume of trade.
Mr. Baheti, what do you say? Because one argument is that this entire move could have these genuine hedgers become the collateral damage as protective puts get pricier. Do you think this is going to reduce prudent hedging and raise portfolio risk in the real world?
See, everybody wants to come and trade in a liquid market. And liquidity in a market is a statistical measure. It's very easy to measure. So what you need to do is take the example of our Indian markets. Look at the liquidity, the statistical liquidity stocks that have F&O, have in the cash segment. versus the stocks that are not in the F&O, and what is the statistical liquidity that they have in the cash segment, you will see the data as clear as day.
Right.
That the stocks that are in the F&O segment are far more liquid in the cash segment than those which don't have F&O in the cash, that don't have F&O.
Right.
So if you are going to target F&O, there will be repercussions on the underlying market. The cost of buying in and getting out will increase, not for a small investor, but for everybody alike.
Ajay, Bagga, what do you say now? If we are going to see that repercussion in the fall in volumes, if they fall about 15 to 20% initially, do you think that's an acceptable price for curbing excess, or does that impair price discovery in a way that ultimately hurts everyone, like is being pointed out? Mr. Gupta also alluded to that.
No, Vikram, again, I'm saying the courageous countries are going after the high frequency guys. It is not that they are looking at inefficiencies, they are manipulating the markets. And it's a very unequal fight. Even the regulator has copped out. So the regulator is doing a cop out. If your F&O volumes, Vikram, are 400% of your equity cash, while the rest of the world runs at 30%, 30 times cash, and you're running at 400x cash, clearly there is something else. And that's not the retail investor. That's the manipulating high frequency guys who are sitting there. One of them you find and you let them go away. These are the ones who are fleecing the country. You are not addressing that by raising these taxes. As Bala said, they will continue to operate. So volumes will be more than enough. The mutual funds hardly operate in the F&O, so it doesn't matter to them at all. To most of the Indian investors, it does not matter. In fact, the retail guys, I would like them to come through the mutual fund route rather than coming directly. They get butchered directly.
Right.
But having said that, for a free market to keep on using tax as a tool and to look at it as a sin tax, that's the wrong thing, because the big guy will not worry. The volumes will not dry out. We are 400x. So, right. And we have to go down to 30x. That's what all developed markets have.
Right.
So clearly there is somebody manipulating the markets. There are countries who have now said, get out of the exchanges. I will not allow co-location. There are countries which are saying, I will not allow high frequency guys to operate in my markets. What value, what nation building are those guys doing? They don't even have permanent establishments. They are not paying any tax apart from this STT. So you increase the STT for them.
Tejas, is that a likely solution? What do you say? Are you expecting more strikes per day? How are you going to deal with this? Are you expecting more strikes per day churn to manage the cost, or do you think there would be fewer, larger, more strategic positions? Because this entire, we need to find a solution now to be able to move on with this, because every time we can't use tax as this weapon.
No, absolutely. First of all, to the point that was just made about HFTs overtrading and taking up the turnover to 400x the GDP. Let's not forget that that is notional turnover. It really is a meaningless number. The premium turnover is a fraction of the GDP, and it's really not a relative comparison whatsoever. With respect to HFTs, HFTs are actually foreign portfolio investors, right? But they are allowed to take broking memberships in India and operate like a domestic participant, which I believe should be looked at by the regulators or whoever is in charge. But despite that, I don't think that raising STT is good from any angle. I think one must empathize with traders and the role that they play in price discovery. It's easy to make an argument that F&O markets don't help in the discovery of cash equities and that everybody should become a passive participant and start moving towards mutual funds. Guys, let's not forget that 10% of the equity market capitalization of India is owned by retail investors directly. They own to the extent of 40 lakh crores, equivalent to the equity AUMs of mutual fund industry put together.
Yes.
So from that perspective, we need to appreciate the fact that they need to be given instruments to hedge. And you can't be giving them instruments to hedge when they don't have any price discovery or liquidity. It's almost as if this side of the argument is brushed aside almost by everybody. It deserves attention. If we are going to become a mature market in the future, we will need to understand that speculators have a role to play and they are an important part of the ecosystem.
Bala, do you agree with that?
Sitting on both sides. if you have Warren Buffett sitting on both sides of the trade,
Yes.
you're really not going to have much liquidity, isn't it?
Bala, would you agree with what you're hearing over here? Because now is the time for solutions. Should policy consider incentives for liquidity provision, these STT credits for market makers, passive institutional hedgers, or do you think that could easily complicate the ecosystem unnecessarily?
I think the point that is being made is right. You need day traders, you need speculators, you need the F1 market participants, and also you need long-term investors. I think that's the way the market is always built from a structural point of view. Liquidity largely comes on the base of the variety of participants coming in the market. As far as the STTs concerns, anybody who of course trades in the market, it of course takes into account the outcome that he will generate after paying all the taxes, whether it is Securities Transaction Tax or GST or many other things. Therefore, this introduction of marginal increase in taxations, of course, I'm also will be taken into account while trading. It's not going to make people actually shy away from trading in the market just because the cost has gone up by, say, about 0.0 to 0.05, though it looks very large from 150%. But the only thing they need, probably they'll have to look at it a little longer term contract rather than a short term contract, where it will have an impact. If I have to churn my portfolio every 7 days, naturally my cost of transaction is going to go up.
Right.
Therefore, the whole model which used to exist in the past, the 1 month settlement versus 1 week settlement,
Yes.
these are some of the things I think I have to undergo has changed as a behavioral part rather than anything else.
Mr. Baheti has a point to make before we wrap up. Go ahead, sir.
I'll just give you a recent example. 2 years ago, RBI put out a circular that says if you want to do currency trading in the markets, you have to have an underlying exposure. We do not want speculators to trade in the market. And now there is no market. So I think that's a very telling example of what you can end up doing to this market.
That's true. So speculation is required. That's a popular view that is coming through. Mr. Gupta, I'm afraid we are running out of time, but these sharp views, the government is saying the STT hike on FNO is a necessary guardrail to protect retail and cool off speculation. And critics, of course, are warning it could dent liquidity, it could nudge trades offshore and penalize genuine hedging as well. We heard some concrete alternatives, but of course, we will have to keep asking. The big takeaway, of course, is that effectiveness is going to be judged by data, the loss ratios, the liquidity, the spreads, where the volumes migrate after the 1st of April. And we're going to track those numbers closely. But my thanks to our panel, J.N. Gupta, Rajesh Baheti, Ajay Bagga, Tejas Khoday, Mr. Balasubramaniam, thank you very much for joining us with your perspective on the big question. Completely out of time on the show. And of course, we will be tracking this very closely. There will be many more discussions and we'll keep getting you perspectives from all the leading voices. But for the moment, from me, Vikramoza, and the entire team, thank you so much for joining us. Good evening.